Well, a story that I haven't had a chance to get to until now, but is still relevant, is something that was published by the Global Times, which of course is Chinese state media. It's China's English language newspaper. Last week, they spoke about essentially that there's rumors going around that China is considering selling off all of their U.S. Treasury bonds that they own. China is not the largest, foreign holder of U.S. debt, but they're pretty far up there. They own over $1 trillion in U.S. bonds, which once upon a time was a really, really big portion of of America's debt. But they haven't increased their holdings of treasuries over the past few years. And actually they're not even at their peak anymore. So they're not as big of a they don't own as big of a percentage of all U.S. Treasury bonds in circulation as they used to. Because, of course, now the U.S. has 20-something trillion dollars in debt. And so $1 trillion here or there is not, it's not as big of a chunk of change as it used to be. Nevertheless, if China wanted to really put the pain to the U.S., people have always said, well, yeah, the easiest thing that China could do is just dump all their treasuries at once in one big lump sum. And people would say, oh, China would never do that because they'd hurt themselves because they'd crash the market and then they wouldn't be able to get a good price for their, for their bonds. But the thing is that, well, obviously, the reason why they would do it is because it would hurt America more than themselves. And honestly, I would have said, for a long time, any speculation about China, the U.S. going to war with China is dumb, not just because of the nukes. Even if you leave out the nukes, the financial power that China holds over the U.S. government, is so substantial that were the U.S. to move to launch any sort of attack against China, the Chinese could dump all of their treasuries at once, and then all of a sudden interest rates would spike through the roof, and the U.S. wouldn't be able to afford to finance its war effort. That $1 trillion in U.S. treasuries is a pretty decent insurance policy against being invaded by the United States. I think that, if I were in control of a very large, powerful government that was afraid of the U.S., like, say, China might be, I think that would be a good alternative even to owning nukes. Because, of course, it is a sort of mutually assured destruction. Sure, if China just dumped all their treasuries, they'd lose $1 trillion or however much, whatever they would have to discount down all that debt to get it to clear the market. But they would cause irreparable harm to the United States as well, because if the U.S. All of a sudden the cost of servicing their debt skyrockets, well, then how are they going to pay for that other than with more debt? And if they dump more debt in to pay to service the old debt, they're just going to keep shooting up interest rates higher and higher, and you're going to have a death spiral in U.S. debt, and the country's going to go bankrupt. But, given the events of the last few months, I'm less confident that China has that much power over the U.S. when it comes to its debt. And so, honestly, the reason why the Chinese, I think, might be willing to float this idea, to put this trial balloon out there, that obviously, it is state media, so it's not like this is something that just some, hard-scrabble journalist happened to discover. This was a story that was handed down from the Chinese Communist Party to be published in their English language newspaper to send a message to the Americans. And the reason why I think China might be considering doing this is because as the U.S. debt grows bigger and bigger, the share that they own is being devalued, essentially, in terms of its impact in the overall market. And so if they wait another 20 years to sell off this $1 trillion in debt, well, if America has, $300 trillion in debt, and China sells $1 trillion in bonds into the market, that's going to be a drop in the bucket. Whereas had they sold, like, I don't know, when the U.S. only had $15 trillion in debt, then that would have been a huge, huge wave that would have totally crashed the Treasury market. And even now, when the U.S. has 20-something trillion in debt, China selling 100 trillion in bonds all at once would have a huge impact. Not as big as it once would have had, but it's still going to have a big impact. And so this weapon might lose its potency if the Chinese don't just go ahead and use it. And so therefore, it might be in their best interest just to sell and get out of the game. Because, by selling all these U.S. treasuries at once, they're not only hurting the U.S. government, they're also hurting Japan, who actually is the largest holder of U.S. treasuries, and you're hurting everyone else who owns U.S. treasuries, which is, the whole Western-backed financial system. What we think of as, the dollar as the world reserve currency, it's really U.S. treasuries that are the world reserve currency. And so if China, even though they can't single-handedly, let's say, sink the treasury market if China was the only ones who sold, well, once China sells, you might then have other people who are on the margins who are considering selling saying, you know what, that we need to get out now just in case this selling continues. And so then you're going to have a bunch of people rushing for the exits and dumping treasuries into the market. And, you could say, well, this is a very, very high level, finance here. It's got to be very heavily micromanaged by the elite. And that's true. But I don't think necessarily that the global banking elite will necessarily be in line with one another. They might just be rats, jumping off of a sinking ship. Not all central bankers are exactly, best friends with Jay Powell and the folks at the Fed. And so even if the Fed would prefer that nobody sells U.S. treasuries if China went and did that, other people might not, have enough confidence in the Fed in order to do what the Fed wants them to do. And so if all these people sell treasuries into the market, the obvious thing that would happen is the Fed would move in to buy them, to try and buy them all up and clean up the market so that you don't just have all of these treasuries dropping to the floor of the bond pits around the world. And so the Fed is going to have to monetize as much debt as is sold in order to forestall the panic. And, not too long ago, I would have said, there's no way that the Fed can do this. But considering how much right now, how crazy things are, and how much of an unwavering faith financial markets seem to have in the Fed, perhaps even if it was just China, if the Fed came in immediately and when China announced they're going to buy $1 trillion or they're going to sell $1 trillion in bonds, if the Fed came out and said we're going to buy $1 trillion, the market might not bat an eyelash. Because the Fed has already spent so many trillions. I mean, the Fed right now owns $1 trillion in mortgage-backed securities alone. The Fed's balance sheet is what, at like $8 trillion now? If they add another trillion onto that and just buy U.S. Treasury bonds, what difference does it make? It's just an ordinary day in the life of a Fed banker. And so China's little weapon may be totally useless at this point. Basic economic logic has been rendered useless, or at least let's just say that financial markets are non-correlated with economic logic these days. And if that's the case, the only way to really believe that something is going to happen is if you've already seen it happen. We never really know what sorts of activities are going to have what sorts of an effect. So that's about where I sit on that issue for now. If you gain anything of value out of this video, I'd appreciate you clicking that like button and sharing this video. And if you haven't already, please do subscribe because I do upload every day and I'd hate to have you miss one. So I'll see you folks back here tomorrow.